Hello, hello, hello. This is Regina Buckley, and I am the CEO and founder of KAB Business Services located in Titusville. Today, I wanted to talk to you in reference to building business credit. So, the topic that we're going to discuss is 12 reasons having business credit is a must for every successful company and how not having it can be disastrous for your business. So I'm hoping that you can actually see my screen because I'm not sure if you can see it or not, but we're just going to move forward as if you can. So I am actually going to go here. Hold on just a second. All right. All right. So the 12 reasons having business credit is a must for every successful company and how not having it can be disastrous for your business is our topic for today. I have been an accountant for 21 years and I started my business in 2007 helping business owners keep track of their finances. Today, we offer full service bookkeeping. Our services that's offered is bookkeeping services, payroll, tax preparation, QuickBooks training, credit score improvement for your business and your personal life. We are located in Titusville, Florida. I have a bachelor's degree in accounting. I am a certified bookkeeper. I also am a QuickBooks Pro advisor, have been a QuickBooks Pro advisor since 2008, and I am a certified credit specialist. So, of course, the topic that we're going over today is business credit. Business credit is credit in a business name that is not linked to your business's employer ID number. This is credit a business owner can obtain that is not linked to the business owner's social security number. When built correctly, the social security number of the business owner is not supplied on any application, meaning that there is no personal credit check to obtain any kind of credit when you use your employer ID number. Okay. All right. So when you apply for something such as an auto loan, the lending institutions actually pull your personal credit using your name, your address, and your social security number. The information is then sent to the consumer credit reporting agencies and they supply the lender with your actual credit report with all the information that they have relating to you or someone relative using the similar name, address, and social security number. With this type of credit, an inquiry is then put on your consumer report, and your report is then used to make a decision if they're going to offer you credit or not. Plus, the credit that you obtain will then be reported onto your personal credit report by the credit reporting agencies. When you apply for something such as a business loan, the lending institutions pull your business credit using your business name, address, and employer ID number. This information is sent to the business credit reporting agencies, and then they supply the lender with a credit report using the information that you gave them. And with this type of credit inquiry, then they will put that onto your business credit report, and your business report is used to make the lending decision. Plus, the credit you obtain will then be reported to the business reporting agencies. So it does not affect your personal credit at all. At all. So applying for consumer credit is pretty much the same as applying for business credit. However, you're separating yourself from the business debt where you don't have to put your social security number on the application. It is important to note that when applying for financing and credit using your business credit, You should not supply your social security number on the application, even though it is requested. When you do this, no personal credit can be pulled because they don't have your information. But if you give it to them, then they can go and pull your personal credit profile to actually determine if you qualify for the loan. It's just as if you and your husband walk into a car dealership and you want your husband wants to purchase a vehicle, but you don't want to be a co-signer or included on the loan of that vehicle. You do not have to put your information there. It's an option. And if you don't put your husband, okay, so scenario, you and your husband goes into a car dealership. You're wanting to buy a vehicle. The vehicle is going to be under your husband's credit, but not yours. So on the application, there is a section where there is the borrower and the co-borrower. If you put your name and your husband's name on the application, of course, they're going to run both of your credit. But if you only put your husband's name on the application, they're only going to run his credit. Even though there's a space there on the application for your information, you do not have to give your information. It works pretty much the same way. So if you don't want to be a personal guarantor or a co-signer for your business debt, just don't put your social security number or your information on the application. When you do this, this forces them to only pull your business credit report. This means you will be approved only on the merits of the business credit report. Your personal report is not even reviewed. So what benefits does having business credit truly provide? Business credit has no direct affiliation with your personal credit. Business credit has no impact on the business owner's personal credit. When done properly, business credit is obtained without the social security number being supplied on the application. This means that there is no personal credit check from the business owner to get approved. This also means that anyone who has bad, even horrible credit, personal credit, can still be approved for business credit. So business credit reports to the business credit reporting agencies, not the consumer reporting agencies. As business credit is used, it has no adverse impact on your personal credit or how it's reported to your personal credit reporting agencies. This means utilizing your account even over the 30% utilization rule won't affect your personal credit scores at all. And there are no inquiries when you apply for business credit. It's not going to show up on your personal credit report when you apply for new loans. Business credit has no direct affiliation to personal credit. That is the biggest thing. It has no attachment. So don't get the two confused. If you are a corporation and you have separated yourself from your business liability, this is the way you need to be applying for credit. So 10% of your total consumer credit score is based on inquiries. So if you are using your personal credit to apply for business loans and credit, then your scores will go down because of you pulling your credit score, your credit report to get a loan for your business. Plus, those inquiries can remain on your credit for an extended period of time, affecting your ability to borrow more money. Some unsecured business lending sources won't even lend to you if you have more than 2 inquiries on your personal credit report within 6 months. So 30% of your total consumer credit utilization, 30% of your personal credit score is based on credit utilization. So if you use your personal credit to get credit cards and loans for your business, if you use those cards, it will lower your credit score. So using more than 30% of your credit limit will decrease your credit score. So if your credit limit is $1,000 and you use $300, you are hurting your personal credit. This means 40% of your total score is damaged just by applying and using the credit that you get for your business. With true business credit, this has 0% effect on your personal credit score. All right, so business credit scores are based only on whether the business pays its bills on time. So with personal credit, you have those 5 factors: credit utilization, your payment history, you have your inquiries, you have your accumulation of new credit, you have what different types of credit you have. All of that plays a role in how your personal credit is factored. With business credit, the only factor is, do you pay your bills on time? That's it. Do you pay your bills on time? As a result of this, business owners can obtain business credit much faster than what they would on their personal credit profile. So here are the 5 factors that is based on your personal credit scores. So take a look at this. 35% payment history, 30% utilization, 15% is your length of credit. How long have you been using credit? So if you are 90 years old, you will probably have the highest credit score of 850 if you paid your bills on time. It takes that long to get an 850 credit score. You have to have had credit or building credit for at least years before that actually even helps your credit score. So accumulation of new credit, 10%. So if you get a new credit card, that's going to actually hurt your credit for at least 6 months. If you only have credit cards and you don't have a mortgage, you don't have a car payment, you don't have personal loans, you don't have store cards, you don't have student loans, then that hurts your credit score. That goes 10% of your credit score is your credit mix. Now take a look at this. For business credit, if Dun & Bradstreet's business paydex score is based solely on how you pay your bills. So if Dun & Bradstreet expects that you are the person that's going to pay your bills before the payment is due, you got 100 credit score, paydex score, or it's credit score. If you pay your bills on the due date, you will have an 80 credit score. If you pay your bills 30 days after the payment due date, then you will have a 50 credit score. So as long as you pay your bills either early or on time, you will have a perfect business credit score. I get this question all the time. People just can't believe that is the only thing that determines what your business credit score is going to be. So anybody can actually go and start a corporation, start building business credit, and use the business credit opposed to the personal credit. But so many business owners have no idea that business credit even exists. Listen, I was in business 11 years before I knew anything about business credit. And the only way I found out about business credit is because I was trying to get a SBA loan basically to have some backup cash in my business account. And I was denied. I was denied the loan when my client was able to get a loan because she had business credit and I did not. And my personal credit score was like 767 at the time. And I was denied only because I had no business credit. And that's when I actually decided I need to find out about business credit. And I did. All right. So consumer credit scores are made up of 5 factors and take years of well-disciplined borrowing to get really good scores. So even if you are just brand new out of high school, you go get a credit card and you pay your bills on time for 3 years, your credit score is barely going to move. Barely going to move. You have to take into consideration all of those factors in order to get an excellent credit score. So if you are older, more than likely you will have a better credit score than someone that's 20 years old or 25 years old trying to build their business credit. If you both was paying your bills on time and you had a perfect credit mix, no matter what, the length of credit has a huge factor on your personal credit score. So business credit scores are mostly based on payment history. So as long as you pay your bills as agreed, you will have an excellent score. And it only takes 2 to 3 reported accounts for you to establish a score. And most vendors have your account reported to the business credit reporting agencies within 30 to 90 days. 30 to 90 days. So you can go from having a failing business credit score to having an excellent business credit score in 30 to 90 days, as long as you get 2 to 3 accounts reporting on your business credit report within that time frame. This means that you can build a business credit profile and have an excellent score in a very short period of time. So another thing with business credit, anyone can see your credit reports for business. With consumer credit, someone has to have permissible purpose to pull your personal credit score. Basically, they must have consent from you to review your reports. Only certain institutions such as banks, auto lenders, mortgage companies, and other licensed to lend money companies can pull your personal credit score. But with business credit, this information is public, which means anyone who wants your business credit information can easily and cheaply get it. Think about some of the people who can see your reports as they wish whenever they want to. You have customers. So customers can go and review your business credit to see if you are even a credible company to work with. Clients, your suppliers, others who you might do business with, competitors, all of them can actually just go onto a website, put in your business name, and access your business credit profile. Here is some of the information they can easily see about your business. The amount of trade lines you have, the credit scores, high credit limits, past payment performance, employees, revenues, and much more if is available to anyone who wants to see it. So you can actually pull your own credit reports to see what others are seeing about your company right now. You can go to a website, http://www.creditsuite.com/finance suite. And you will be able to review your own business credit reports. Would you want to do business with a company with a similar profile? What does your profile say about you? Are you established? That's the main thing that most people are looking for. How will your customers, clients, even competitors think about the information that they find out about your company? Keep monitoring your reports regularly to see what others can see about you. And keep building your business credit so that you can have a credible image portrayed for anyone who wants to see your credit in the future, especially those who lend money or issue credit. When you don't use your social security number on the credit application, you are almost always provided a personal guarantee. Personally guaranteeing the loan means that you are personally liable for your business's debt. So let's say your 18-year-old child goes out there and purchases a car and you co-sign for the loan. They don't pay the car payment. You are responsible at that point to actually pay for that car loan. Now, if your child goes out there and go and purchase a vehicle and your name is not on the loan, no matter what happens to that car, it is not your liability. It is not your debt. It's not your debt. And it's the same way. And when you're building your business credit, you do not want to be a personal guarantor. So if you were to default on one of these obligations, the creditor will pursue your business assets first, and then they'll come after your personal assets, including your home, your cars, your stocks and bonds, your bank accounts, and even all other assets, meaning if you have a 401k account, you have retirement, they can come after all of that if you are a personal guarantee. Business owners do not expect to fail. But unfortunately, 90% of business owners do. It makes no sense to put you and your family's future in jeopardy when you know going in that starting a business is a huge risk. Remember, many times the reasons a business might fail have nothing to do with you or things that you can control, such as shifts in the economy, going out and having a car accident, getting ill. All of those things play a role with the things that you have to think about when you are starting a business. It's possible. It happens. It happens every day to people. So don't take that risk of losing your house or putting your family out on the streets because you're laid up in a hospital bed and you can't pay the debt of your business. Separate yourself personally from your business. There is no question starting and running a business is risky. This is why most conventional banks make it so hard for new businesses to get a loan. So don't use your personal guarantee unless you have to. With many business loans, you will need to, but with credit, you don't need to as long as you build your business credit. If you have a strong business credit profile, there is absolutely no reason why you need to be a personal guarantor or put your social security number on the application. Anyone who has sold or bought a business will tell you the importance of business credit. Now that you know how easy extensive credit and financial information is to get for your business, if you were a buyer, wouldn't you want to get it? So what I'm trying to say is business credit actually builds business value. It builds value in your business. So if 10 years down the line, your business is successful, you decide you want to sell it, guess what? You can add on the cost of having a business with business credit already established. Use that to your advantage. I mean, like if you can add a couple $100,000 extra in value in the business when you sell it, just because when you walk away from the business, the credit stays with the business. It does not go with you. It stays with the business. So you're basically giving the person who's buying your business a business with credit already. Use it to your advantage. So most people buying a business is going to look, is the business established? Do they pay their bills? Do they look like a successful company? The value of business credit when selling your business, if you could choose from two companies to buy that If you could choose between two companies to buy and that were in the same exact area, selling the same exact product, one had business credit and the other one does not, which one would you want to purchase? When a business owner applies for financing or credit, their business credit is reviewed. Not having business credit established will get an owner declined for financing. But there is no fair credit reporting act in the business world that requires those who review your credit report to notify you that they did. So you know how when you go out and you apply for credit and you're under your personal social security number and you get that nice letter in the mail saying what your credit score was, who pulled your credit score. You would not get anything like that with your business credit. Anybody, including you, can go and pull Walmart's business credit, Dell's business credit. You can pull your competitor's business credit. You can pull the business across the street from you business credit, and they will not even know that you even pulled it. So even though it's always reviewed, most business owners have no idea that it is. Another benefit of business credit is that it more than doubles your borrowing ability. You already have consumer credit. Now you can have a whole other credit profile with business credit also. This means that is the only way to get multiple Staples credit cards, Office Depot credit cards, Lowe's, Walmart, Target, and so on in most cases. When you have access to more than one store and cash credit card, you also have access to a lot more usable money that you can use for your business. Plus, per SBA, credit limits are 10 to 100 times that of consumer credit limits. Obtaining business credit radically increases your available credit. As a result, businesses were sorry, but in the business world, it might be closer to 30,000. So if you are someone that makes $20,000 a year, your credit limit under your personal credit will probably be about $1,200. However, you can make $20,000 a year in your business and you will get a credit limit of $30,000. Why? Because businesses have a need for higher limits, and higher limits they get with business credit. This is another reason it's very hard to scale a business using personal credit only. Business credit can be obtained very fast. You can get approved for initial vendor credit to help your business grow within 1 week. That credit will typically report to your business credit reporting agencies within 30 to 90 days. Once reported, you will then have reported trade lines, which in turn give you an established business credit report. Only your profile is established in 90 days or less. You can then start getting real usable revolving store credit cards. Within 120 to 180 days, you can get real credit cash cards such as Visa, MasterCard, Discover, and American Express, and that you can use anywhere. Business credit is perfect for startups. Most conventional and private lenders won't lend to companies without financials and who have been open for 20 years, 2 years or more. The most popular cash flow type of financing requires 1 year in business and steady revenue. Most consumer credit card approvals are based on personal income. With business credit, even a startup can get loads of new credit without any of these items. So business credit is perfect for businesses who don't have or want to show financials. Let's face it, we write off all expenses in the business we can. This leaves a smaller net profit, which is what most lenders and investors look at most. Business credit doesn't look at financials or your bank statements. A business, even with no cash flow, can be approved for high limit credit cards, helping them grow their cash flow. And tax returns. Tax returns aren't looked at either. So even if the business shows a loss, they can still get approved. Most business lending requires collateral. This is because not this is because most businesses fail and the risk of repayment of lent money is very high. This is why most conventional lenders make it so hard to get money that they are not set up to take this type of risk. This is also why SBA requires all business assets and even personal assets be used as collateral. For instance, I have a client, she has an ice cream parlor, and when she got her SBA loan, she had to use her house as collateral. Now, she no longer lives in the area where the house was located because her business was here. She moved here and rented a house. But then she got to the point where she just want to buy a house. And she couldn't because she wasn't able to get another mortgage because of her income. So she had to actually sell her other house to get it from under the SBA loan. And when she sold the house, she had to use all of the proceeds from the sale of the house to actually pay off the SBA loan because her house was being used as collateral. And that was something that she had to do because her house was collateral. She was not able to get another mortgage. So she had to pay off the house, pay off the SBA loan, and use all of the proceeds from the sale of her house in order to do that. So this is also why SBA requires all business assets and even personal assets be used as collateral. Don't get caught in that loop. Business credit is one of the only ways to get money without providing collateral to offset the risk. 90% of the general population knows nothing about business credit. Now that you do, you have a huge advantage over other businesses that don't. It's much easier to grow a business with access to credit. You can test advertising easier and make some mistakes without risking it all. And you can do this without putting your personal finances in jeopardy. Every highly successful business in this country has business credit. Most of the companies use their business credit to get as big as they are today. Take a look at how many Experian trade lines some of the US top companies have. Facebook. Facebook has 40 trade lines. Microsoft, 131 trade lines. Apple, 138 trade lines. Walmart, 513 trade lines. And these are some of the biggest companies in the US, and they do most of their business on credit. So why aren't you? Contrary to what many believe, business credit is not only for the big companies. Any company can build business credit. Big companies are typically the ones who enjoy the benefits of business credit the most because they have CFOs who know how to obtain and use business credit, where most small businesses don't. But you absolutely can get your hands on the exact same credit profile as these larger companies. And if you know the formula, you can obtain it too. It's okay not to have business credit because you don't know about it. But once you do know about it, it's steps that you must be taking to build the company's credit profile. Just like a consumer with bad credit often doesn't rebuild their credit as they should, and they just get by until they eventually need a home or a car. No business can succeed long term without building their credit. Plus, it's just much easier to grow with credit than without it. The business credit building process outlined. A business credit report can be started much the same as a consumer credit profile. The business can be approved for small credit cards to help them build an initial credit profile. These types of initial cards in the business world are commonly referred to as vendor credit. Net 30 terms are common with most vendor credit sources. This means that they will give you credit on the net 30 terms. That means you purchase an item, they send you an invoice, you have 30 days to pay it. Some companies will have you pay for your first couple of orders and others won't. Some companies report your credit quickly and reports quickly, and some don't. Look out for all of those things when applying with vendor credit. Some of the most popular vendor sources include Uline, Laughlin and Associates, Quill Office Supplies, Reliable Office Supplies. You will need a total of 5 payment experiences reported to start getting revolving store credit. Don't apply for store credit with no payment experience, no score, and no profile because you will get denied. Most major retailers do offer revolving business credit. To get approved, they will want to see that you do have established payment experiences, an established credit profile with at least one preferably or 2 reporting agencies. Positive credit scores with reporting agencies that your credit is being reported. Get approved for revolving credit. Some starter revolving accounts include Radio Shack, Lowe's, Home Depot, Staples, and Office Depot. Most major stores do offer business credit, even though they don't promote that they do. So once you have followed the steps outlined here, you can start getting credit with these major retailers: BP, Chevron, Walmart, Target. And then these stores also offer business credit: Amazon.com, Best Buy, Nordstrom's, Sam's, Costco, and so much many more. Here's just a few others that actually offers business credit. Once you have a total of 10 payment experiences, you can then start getting approved for cash credit sources. It's also recommended that you have at least one account with the $10,000 high credit limit so that your cash limits are as high as possible. You can even contact us if you do have good personal credit or has a partner who does not. If you do not have a partner who does, to get unsecured credit, in which approvals are based on personal credit but report to business to help expedite your time frame to get cash credit. So that is actually the end of my presentation. If you have any questions, please reach out to me. My website is www.regina-kab.com, and you can actually get a copy of my definitive guide to building business credit by going to my bit.ly link, which is http://bit.ly/definitive guide, and you will be able to download the guide that actually explains everything that we talked today and how to actually do it. I thank you for watching this video, and if you have any questions, please reach out to me and let's get to building your business credit.